Hello everybody. I'm so glad that all of you could join us for this webcast today on wage reporting for beneficiaries of the Social Security disability programs. Many of you may have thought it's kind of an odd topic to do a webcast on, but it is a topic that is really critically important. There are so many problems that beneficiaries can get themselves into when they don't report their wages at all or when they report improperly. Let's take a look at some of the things that are the importance of wage reporting. First of all, just failure to report wages causes literally more problems for the people that we work with in WIPA projects than any other single issue. Any of you CWICs sitting and listening to this know that that's the case. How many times do beneficiaries come to you about to take a job and we find out that there's past wages that are unreported or undeveloped, or people that are in a massive overpayment situation because they failed to report wages and Social Security found out about them later? I think sometimes we assume that beneficiaries know what they are supposed to report and how to report it, and nothing could be further from the truth. It seems like you would know you have to report wages, but for a lot of people, they think that when they get a paycheck and that FICA is taken out, there is an assumption that there's an automatic sharing of information within the Social Security Administration. You'll often hear beneficiaries say, well, they were taking that FICA out of my paycheck. I assumed that they knew I was working and that they would have all the data about how much I earned. It doesn't work that way. And those of us who do benefits counseling for a living always see the results of that assumption. The problem also is, even when we tell beneficiaries to report, we have to tell them more than you need to report. They don't know what that means. They don't know how to go about it. You can report by calling the 800 number. That's one method we wouldn't recommend. Or you can report by sending written statements of earnings into the local field office. One of those methods leads to trouble where there's no documentation that you reported. The other method is useful, and there is written documentation indicating that you did in fact report. Information, even when our beneficiaries report the information and report it properly using appropriate procedures, unfortunately, the Social Security Administration personnel are awfully busy, and that information isn't always acted upon quickly. It isn't enough to just report. Beneficiaries have to watch their payments, watch the correspondence. Follow-up is often required to make sure that the information provided is actually acted upon. And I think another assumption is that our beneficiaries say, well, I reported it and I kept getting a check. Yeah, I know my earnings were really over what they told me I should have, but I figured they knew what they were doing. There is a lack of understanding of how enormous the Social Security Administration is and how much time and energy it involves to enter all of this data. We really have to teach beneficiaries to be better advocates for themselves and to know, to be watching what should be happening to my check. Watch that check to make sure that those effects really are being seen. All of us who do this for a living know that failure to report earnings, or in the SSI program, any other kind of countable income, can cause very serious overpayments, many of which are thousands and thousands of dollars. Now, these overpayments are a burden for the beneficiaries, and they can be a burden over years. Now, there is certainly ways to forgive an overpayment, particularly in the SSI program, but we should not assume that overpayments can be forgiven or even negotiated readily. It's a whole lot better if we can just avoid the overpayment to begin with. And that really leads us into this whole notion that a lot of what you're doing is an ounce of prevention. You do a lot of curing, and that's wonderful, but that prevention is really the way to go. Now, let's not misunderstand. You CWICs, you folks who work for WIPA projects, you are not responsible for providing wage reports yourself. It's not your job to call Social Security or to send letters in writing down what people have earned. Now, we certainly can facilitate that. We can support it, but it's not something that a CWIC should be doing independently. A huge part of your job should be teaching beneficiaries proper wage reporting techniques and monitoring that to make sure that they really are following it. It isn't enough to just tell the beneficiary, just report this, because they don't know what that means. And there are certain techniques that are more successful than others, and it really does involve very planful and overt teaching. And that's something I think sometimes we're not really doing as much as we should be. Now, another aspect is not just reporting wages, but reporting the usage of work incentives. And any CWIC knows that that's a huge part of your job, helping that beneficiary develop an impairment-related work expense, helping them understand that tracking the expenditures by keeping receipts and making sure all the documentation is in order is critically important as well. And that, again, that's a part of our teaching role, but also a part of our active supporting role, where you might be checking with the beneficiary on a periodic basis. Are you keeping all of your receipts for your transportation? Remember, we've claimed an IRWI. When you have your redetermination in the SSI program, they're going to need to see that. Or when that substantial gainful activity determination is made, Social Security is going to need to check those receipts at that time as well. So it isn't just reporting wages, it's reporting anything that will reduce countable wages or affect the amount of wages that would count against a beneficiary. And finally, once those reporting skills are taught, it isn't enough to just tell the beneficiary to go off and do it. With some people, we really do need to keep checking. Under the new WIPA paradigm, we have a much broader role in long-term follow-up with beneficiaries, and part of what we need to be checking on is, did you report your wages? How did you do that? Did you keep a copy of the letter that you sent in? Where is it? Have you kept your receipts? All of that, just making sure that everything has gone well to avoid that overpayment that could occur from failure to report. Let's go ahead and take a look at the differences between wage reporting for individuals who get a Title II disability benefit, and you all know what those are: SSDI, CDB, or Childhood Disability Benefits, and DWB, or Disabled Widows or Widowers Benefits. Those are all of the programs, the disability benefits, that are authorized and afforded under Title II of the Social Security Act. Let's take a look at that first, and then we'll move on to the SSI program. A very simple rule when you're reporting is just to remember that in the Title II program, a good time to report is whenever you would expect a change to be caused by the wages. You see a list here of some of the events that might cause a change in situation. The use of a trial work period service month. So if a beneficiary is earning over the current trial work period figure, you would want to start reporting those months where you are actually using those valuable trial work period months. Certainly at the end of the trial work period, we hope you're tracking that. When it is concluded, remember that an important activity takes place. This is where Social Security should be checking the beneficiary's earnings to see if SGA, substantial gainful activity, is occurring. So it is critically important that we report wages again at the end of the trial work period. Now, it doesn't say this on the slide, but I want to make sure that you remember at this point there is another type of reporting in the Title II program that is essential. That is to fill out that work activity report. Now, that is a Form 820 or an 821, depending on whether the individual is in wage employment or self-employment. And it's more than just sending in the pay stubs. This is where you're literally describing the work activity, you're identifying any special supports the individual receives, giving clues to subsidy, which is a work incentive, impairment-related work expense, unsuccessful work attempt, any of those tools that claims rep has in their toolbox to make a proper SGA determination. There should be clues to that written in the work activity report. Now, of course, if an individual is engaging in SGA level work, you want to make sure that that is noted by Social Security at the end of the trial work period or whenever it occurs, and that the payment is stopped, is ceased in a timely manner. many cases you will report and report, and that check just keeps on going. We have to make sure beneficiaries understand, you're getting checks that you're not entitled to. Let's not go spend those. Let's put those in the bank. Let's make sure that we have sufficient funds to pay these back when Social Security gets all caught up and notices when the actual check should stop. Another time that is very important that wages are reported timely is during the extended period of eligibility. After that SGA determination has been made and the cessation month and the grace period has occurred, that 3-month period you're allowed to get that check. Remember that after that, in the EPE, individuals are allowed to get a cash payment for any month where their countable wages are above the current SGA limit, below the SGA limit, and their payment should not be received in months where their earnings are above the SGA limit. This takes some very careful tracking, and it's something we need to be teaching beneficiaries, looking at those pay stubs to make sure that they're being submitted, tracking it carefully on that trial work period / SGA tracking chart, which all of you WIPA personnel have been trained to use, so you know which months was a payment due, which months was a payment not due, and you can keep track of that and make sure that everything goes well. And certainly, that last bullet there, the need to reinstate payments either during the EPE or even afterwards, you have to make sure that you're sending in those pay stubs, reporting that information so that the check is started again. Well, there are some challenges for Title II beneficiaries that make proper reporting and having those payments affected properly really kind of difficult. And that is that the first thing people don't really understand is that if you're working at, say, $200 or $300 a month, that level of income is below even the trial work period guideline. That doesn't cause change in your Title II check at all. You can report those wages and probably should report them, but nothing will happen. No trial work period months are used, no change in the check obviously occurs, and that can be kind of hard to communicate to a beneficiary. Yeah, it's not going to affect your check, but you still need to report. You still need to report. The second point is that in the Title II program, and many of you know this, trial work period and particularly SGA determinations require that Social Security look back over a period of past work. In order to find a pattern, you can't really figure that out in real time. You have to look backwards in time. So if your beneficiary is reporting on a monthly basis, it doesn't really lend itself well to this sort of retroactive looking to see a pattern. Actually, it's better in this system to hold those wage reports until a decision like SGA is being made and submit all of that in one fell swoop so that that pattern can be seen if it exists. That's kind of hard to get a beneficiary to understand. Remember, too, in the Title II program that Social Security is not looking at what income was paid. That's the way it's done in the SSI program. They're looking at when was the income earned. And my goodness, that can create some problems. Remember people that are paid later than the income is earned, people that are paid on different systems that don't correspond with when the income is earned. This can create some real problems. So when we teach beneficiaries about how to track their wages, we have to let them know it's not when you got paid. It's when did you earn it? When was the work performed that generated this particular income for you? Different field offices also will use different processes. And for those of you who work with numerous field offices, it's not uncommon to have a work incentives liaison tell you to follow one procedure in one office where another office down the road prefers another procedure. There are variances in preferences. CWICs need to be asking, what is your preference? How do you like to have wages reported? For Title II beneficiaries, some offices do want the monthly wage reporting. In other offices, they're going to say, can you not worry about it until we get to the end of the trial work period and then just make sure that we have all of that past data and the data moving forward? you need to find out what is the preference in that office and follow whatever directions you're giving. Don't assume that everybody does it the same. That's not the case. And remember, too, that you can report and report and report, but it really only matters if the claims rep has taken the time to develop the work history, to verify those earnings, and to adjudicate it. That means to make those determinations like, yes, the TWP month has been used here and here and here, or no, SGA is not occurring. There is no pattern of SGA level work. Those are the determinations that the wage reports you're sending in are supposed to lead to. So if you're reporting diligently and no one's paying attention, that doesn't do anybody any good. Sometimes we have to rattle the cage a little bit and make sure that those determinations are made. Well, what can you do to help in these situations? First and foremost, CWICs really need to have a close relationship with their local field office. They need to know that will on a first-name basis. They need to know what procedures are preferred, how that local office wants things done. There's no quicker way to make an enemy than to simply disregard whatever the field office staff is telling you to do. We need to make sure that we're being helpful, not a hindrance in terms of their ability to develop that work history and make decisions. Stressing that responsibility to report is so critical. Our beneficiaries sometimes think that it's someone else's job. Maybe they believe it's the CWIC's job. Maybe they think Social Security just knows that they are working and what their wages are. Sometimes they think, well, it's my rep payee that's doing that, or my case manager. Well, unless we're checking and verifying, we don't know. And who ultimately is going to suffer for failure to report isn't the rep payee, it isn't the case manager, it's the beneficiary. It's their check. So we have to make sure that they understand their responsibility and keep them informed and keep them on the ball in terms of checking to make sure that that check they received is rightful, that it was supposed to be received. Teaching people to keep those records. It is so important that we take the time to teach. There's the old expression about fishing for someone, and you catch a fish for them and you feed them for a day, but when you teach them to fish, you feed them for a lifetime. And there is no clearer proof that this saying is true than reporting. We have to make sure beneficiaries understand what has to be done, that what documentation needs to be kept. All of those receipts, let's keep them in that shoe box or in that file folder, and that we know where that is, and that we keep these until the time that Social Security needs them to make that determination, whatever that might be. Something I think we forget about is that we look at the paperwork that's involved in the WIPA system, and we kind of look at that as something Social Security makes us do, and it doesn't really have any bearing on my job. Well, that's not true. The WIP, which is the Work Incentives Plan, is really your to-do list with that beneficiary, and you can use that WIP very successfully to structure reporting periods, reporting time frames for beneficiaries. You can also use it to hold beneficiaries accountable so that when you're updating that WIP, you say, okay, you told me you were going to have these receipts kept, you were going to have these pay stubs, you were going to mail everything in. By this date, have you done it? And where is your documentation that you've done that? Don't just look at the WIP as a useless piece of paperwork to satisfy your funder. It truly is something that, if you're doing it properly, is an aid to you in your job. It's not just a hoop that you have to jump through. And then, of course, proactively following up. We've said it about 17 times just in the first few minutes, but it's critical. You can't just assume people are going to do this. You have to be checking. And then you have to be looking to see, did Social Security actually act on that information, or have they not gotten around to this yet? Well, that leads right into this slide. How do you check? Well, I tell you, the best way I know to check is using that invaluable BPQY. And you know that stands for Benefit Planning Query. And it's a report that we request from Social Security that shows us a whole lot of things. It shows usage of work incentives, it verifies benefits for us, But a really important thing that we can see on the BPQY is what Social Security knows about the work history of the beneficiary, because that's going to show on the BPQY. The BPQY is a report that's pulled from a variety of data systems, and if you've been reporting and that information hasn't been entered or it hasn't been developed, the BPQY is going to show that. Well, let's look at some things you could see on that BPQY that should send some red flags up, that should say, uh-oh, past work history existed, but it's not showing up. First of all, your beneficiaries typically know, oh yeah, I had a job and it lasted from this long to this long, or yeah, I worked at this place. They're going to tell you those things. And if you've done an appropriate intake, that data is going to be written down, at least rough information that the beneficiary gave you. So if your beneficiary is saying, yeah, I've worked several times since I got on benefits, you get that BPQY, and at the bottom of the second page of the BPQY, you see no wages listed, you've got a problem. That means that that work either wasn't reported, or if it was reported, it was never entered into the system or never acted upon. Here's something that you'll see often. You know, Social Security does an interface with the IRS rolls. A lot of our beneficiaries don't understand that, but they do. They do have access to that data, and it will show on the bottom of the BPQY when you see annualized amounts, like a year listed, and then like a large amount of wages at the bottom. That's being pulled from an IRS interface. Now, what's interesting, you know, April 15th was just last week. Many of us know what's taxable isn't the same as what Social Security is interested in terms of earned income. Interest income is taxable, rental income is taxable. All of that is going to show on your taxes. All of that is going to get dumped into the BPQY when Social Security does an interface. Maybe I'm showing that I paid taxes on $30,000 in a year. That doesn't mean that all of that was earned income. And it's earned income that Social Security is interested in the Title II program. So when you see that total amount at the bottom and it doesn't match the wage data that the individual is reporting to you or that Social Security is showing, particularly if the wage data is much higher, you've got a problem and you're going to need to push that a little bit further. And that third bullet on your slide here is exactly the same as that. When you have annual income showing, but you have no monthly breakdown, there's no V in a parentheses after that, that means that the wages have not been verified, which means in the Title II program, a month-by-month breakdown hasn't been performed. And if you just have annual data, how do you know which months were actually TWP months? How are you able to really know if SGA has occurred? Well, you can't. So that's an indicator that some research needs to be done, further development needs to be done. It's very common to show very high annual income, again because of the IRS interface, but under the section that says TWP months used, it's blank. Well, that's a red flag. That should tell you, the CWIC, that the data that you've sent in has not been adjudicated. Nobody's looked at that to see, is it sufficient to trigger a trial work period months, and which months did that work actually occur, and how many trial work period months have been used. Heaven forbid, maybe all of them have been used and you've moved into the extended period of eligibility. This BPQY can tell you where the problem areas are. And when we see the problem areas, we need to push further. We don't ignore that. We work with the beneficiary, we show them the BPQY, we say, this is what they're showing, does this match your recollection? Then we have to help the beneficiary gather the month-by-month breakdown of those wages and get that into Social Security so that TWP months can be tracked appropriately and SGA, if it's occurred, can be determined and the check ceased appropriately. Let's switch gears. You guys all know that the Title II program is one thing and the Title 16 program, or SSI, is a horse of an entirely different color. This program very much needs month-by-month wage reporting because, unlike Title II, where your check remains the same, you either get all your check or none of your check. In the SSI program, you are allocated a payment based on exactly how much income you had that counted in that month. To make matters even worse, you all know earned income is not the only thing that counts. You've got all kinds of stuff in the mix here. You have to make sure that beneficiaries know what needs to be reported. And if you think that SSI recipients have any idea that all the different things that need to be reported, I hate to tell you this, but you've got another thing coming. They don't. So it's very useful to actually provide them with a list. Now, in the packet of materials that we provided you, we gave you a handy little document to use with beneficiaries that's entitled Tips for Reporting Income to Social Security, or Reporting Tips, something like that. And on that little document is a chart, and it lists the things that a beneficiary needs to report if they get Title II disability benefits and or if they get SSI. And it's really important that you print that off, you give it to beneficiaries, every beneficiary that you work with who's going to go to work, and you literally review that with them in a very planful manner. You go over all the tips that are in there. If nothing else, you go over that chart that says these are the different things that can trigger a change in your SSI cash payment that you need to make sure Social Security is aware of. Monthly income does affect the SSI cash payment amount, so income changes need to be reported promptly. Now, here's an interesting fact. Different field offices have very different preferences about reporting in the SSI program. Now, we all know that exactly how much you are paid or received in a month is what is used to determine what your cash payment is, or what you're due for that month. The problem is, for people that have widely varying jobs or amounts of income, people that work on an hourly basis in the service industry, restaurants, Walmart, places like that, you know that one month you may have a lot of hours at work, whereas the next month you may have very few. So your wages are going to fluctuate. When that happens, it's a lot easier for everybody if Social Security simply estimates the amount of monthly wages and uses that estimate forward until the redetermination that occurs every calendar year. Now, some field offices don't want to estimate. Some really do want that monthly report, that those pay stubs to be sent in every calendar month so that they can generate that letter and adjust that check. Now, I will tell you that the preference for the monthly reporting is the minority, would be my guess. In most cases, the field offices will prefer estimation. It's just much easier for everyone. And literally, it's much easier for you and the beneficiary. Now, when you estimate earnings, you need to be careful that you're not estimating too low. Because if you do that, when you come to redetermination time, Social Security goes backwards, takes the actuals, figures out what everybody should have gotten, and you can either owe them money or they owe you money. Well, I would much rather be in the position of getting a lovely windfall from Social Security than owing them money, which then comes out of my SSI check or where I have to write them a check. So estimation, we should not view that as a bad thing. That's a good thing. We just have to help the beneficiary come up with a solid estimate, and then if a significant change occurs, they become ill, they're laid off, their hours are reduced, then we need to report that to Social Security as well. In some cases, monthly wage reporting actually can cause confusion. When Social Security enters the data, it generates a letter. And if you're reporting every month and things are changing every month, you get this really awful stream of letters. Oh, we owe you this for last month. Oh, wait, next month we should have paid you this, but we paid you that. And it is just cacophonous. So when possible, ask if estimation is allowed and if it's preferred, and by all means use that as a just a more comfortable system for everybody involved. And that way your beneficiary will get a nice little windfall if you've planned things well at the end of the year, rather than the yucky letter saying you owe us however much. Now, what are the ways to report? Well, basically, a report needs to be done in writing. Now, I'm going to actually break that rule because there is a new automated wage reporting system that is telephone oriented. You do that over the phone, and it's a lovely addition to the options that you have. And I'm going to talk about that in just a minute. But if you're going to use more traditional methods, we recommend not verbalizing that. Don't call your local field office. Don't call the main Social Security toll-free number, and make sure the beneficiary knows not to do that either. You're better off by capturing whatever the change is related to your earning status in writing. And you know us at VCU, a form for everything. In your packet, you should have gotten a form that we recommend you use. Certainly isn't required. It's also in your WIPA training manual, and I believe it's on our website as well. And it's called a Notice of Change in Earnings Status. And what that means is any change in an individual's earning status can be captured on that form. And it can be used for Title II or Title XVI SSI recipients. It is a very open and flexible form. You can save that in Word format as a template. Every time you have a beneficiary you're working with, you can teach that individual to complete that form either in handwritten or on the computer, or you can complete it. You just can't mail it in without the beneficiary and or their rep payee paying it, because otherwise it's just a third-party report which Social Security has to verify with the beneficiary anyway. But you can certainly help fill that form out as long as that beneficiary signs it. And you can mail those into the field office. I love those. You keep a copy, it's in your file, you give one to the beneficiary, then we're all covered on our bases in terms of proving that you did fulfill your responsibility for reporting. You can fax those in. Many field offices prefer fax to mail. You can address that to a specific human being, whether that's this claims reps assigned to this person or the work incentives liaison. Again, check with your field office. They have different preferences. Or last case scenario, you can certainly hand deliver these kinds of things to the Social Security Administration. Now, the last bullet here is something new. You can now submit wage information for SSI recipients using an automated reporting system. And I believe it's using a toll-free number. It's a different number than the main toll-free number, and it's the only phone reporting that we would recommend. Again, we don't recommend calling the local field office on their local number or using the national toll-free number, just the general information number for reporting. And of course, by all means, you have to drill it in, drill it in, drill it in. We keep copies of everything. Beneficiary keeps a copy, you, the CWIC, keeps a copy. It's another reason why sometimes it's easier for us to actually develop the form, because we've got that copy machine around the corner. Most beneficiaries wouldn't have that. Alrighty, let's take a look at this brand spanking new automated wage reporting system. This reporting system, you got to love the acronyms here. The full name is the SSI Automated Telephone Wage Reporting System, or SSI TWR. My goodness, what a mouthful. Basically, this is a special toll-free number that beneficiaries can use, and it has one purpose and one purpose only, and that's to report wages, okay? Not other forms of income, wages. And it is a fully automated system. There's not a human being to talk to on the other end of the phone. Now, there's positives to that and there's negatives to that, but it is fully automated. Now, this does not work for beneficiaries who have special work incentives, with one exception that I'll show you in a minute. So if an individual is using a pass, if they have impairment-related work expenses or blind work expenses, SSI TWR is not for you. We need to use a more traditional or manual reporting system. Now, an interesting fact is that for transition-aged youth, people who are claiming the student earned income exclusion, as long as that's the only work incentive, can use the telephone wage reporting system in the SSI program. Many of you will know from reading your manual and getting training that the student earned income exclusion is the only work incentive that is truly automatic, okay? That if you are eligible for this, it is applied automatically. It doesn't require a request, it doesn't require certain forms or documentation. Social Security is supposed to know who is eligible for this, who is under the age of 22 and regularly attending school, and then it's applied before any other work incentive, so it's taken right off the top. Now, parents or spouses who are not disabled and have income that will be deemed to the beneficiaries, that's also a good candidate for using the SSI TWR system. That may not have occurred to folks, but it certainly is. Even a concurrent beneficiary can use the TWR system as long as SSI is received. You can use this assuming you have no other special work incentives claimed besides student earned income exclusion. Now, there's a note there at the bottom, warning, warning, that concurrent beneficiary is still going to have to use manual, traditional forms of reporting for the Title II side. And remember, we do recommend double reporting for concurrent beneficiaries just to make sure SSI claims rep knows I'm working, they're going to treat the earnings in one way, Title II knows I'm working, they're going to treat those earnings in a whole different way. Double reporting, just one of the lovely obligations of concurrent beneficiaries. Well, who is not a good candidate for using this automated system? Well, if you have impairment-related work expenses, if you meet the definition of stat blind, statutory blindness, you've got BWEs, you're not a good candidate, and certainly people who are working under a plan to achieve self-support. So if you have any of those bells and whistles, sorry, you can't use the automated system. Let's just fall back on that manual, the more traditional forms. Now, here's another thing to remind people. You know, the new automated system is what it says, wage reporting. It does not accommodate you trying to call up and say, oh, my deemed income has changed, or my in-kind support maintenance has changed, or any of these things. It is only automated to deal with earned income, specifically wages. It is not a slide here, but I will show you in a minute. Self-employment, also not a good candidate for using the automated wage reporting system. There are some very unique ways that Social Security deals with income derived from self-employment, and the wage reporting system does not accommodate that very readily at all. And beneficiaries who have more than one employer in the same month, 2 part-time jobs or switch over, also not good. It's very good for a very limited type of circumstances, but you just can't use it for people that have some unique complications. And having more than one employer within a given month, it's not going to be accommodated by this system. Now remember, automated wage reporting is not required. People may use it if they want to. They do not have to. Now, one of the things to remind people is if they do choose to use it, that you have to make your report within the first 6 days of the following month. Now, in the packet of materials that we gave you for this event, you should have instructions from Social Security about using the telephone wage reporting system, and even these worksheets that are just wonderful for you to figure out what you're going to say on the telephone before you actually dial the numbers, so you're not stuttering and mumbling and, oh, let me go do my math. Fill out those forms before you dial that number, and then you'll be assured that the right information will get communicated. If you miss the automated wage reporting system's time frame for reporting, those first 6 days, no big deal. You just do manual, traditional forms of wage reporting, and then you can move back to the automated system the following month. No harm, no foul. That's fine. They don't expect you to use it every single month, and there isn't a problem if you use manual 1 month and the automated system in another month. Well, here are some things to watch out for, because if you've used automated phone systems yourself, and I would guess almost all of you have, you know that because it isn't a real person on the other end of the line, you really do have to speak very clearly or it gets muddled. You have to be able to say your name, your first name, and your last name. You need to be able to understand requests for information that are spelled out by the automated system. Those are recorded requests. And you either have to speak or be able to use the lovely keypad, the touch-tone pad, to enter the date of your birth and Social Security information. Now, we all know, working with some beneficiaries, this system just isn't going to accommodate their disability. That's okay. It's one choice, and for certain people it will be the best choice. For other people, just use more traditional methods. you have to make sure that people who choose to use this know to call that phone number between the 1st and the 6th, or it won't work. The name to be used for authentication is the name that is on the most recent Social Security card. You're going to really mess up that system if you're verbalizing names that are not on the card or it doesn't match. It won't be able to go through and match the name with the SSN, and that's critical, or the information doesn't take. If the individual is reporting wages for another person, well, that's pretty common. Most of our folks, or many of them, have a representative payee, and it's the rep payee that's going to do the reporting. Well, they need to have their own name, their own Social Security, the date of birth information, because Social Security needs to know, well, who are you calling? And you're calling for this other person. We need to be able to track who you are if you're not the beneficiary. And that all has to be written down and be prepared on the little worksheets that Social Security provides that are in your packet, so that when you dial the number, all that information has been written down and you're ready to go. You're not fumbling around trying to find your Social Security card or anything like that. Make sure the report is appropriate for use in this system. Not everyone is a good candidate. Make sure you figured out what gross wages are, gross, not net, okay, in the month. And I'm going to give you a caution here, because you know some people do have automatic deposit of their paychecks. That's not going to be gross income that's deposited. That's going to be net. So if you have that automatic deposit, there needs to be a way for the beneficiary to go and see the printout. What did I actually earn? How much did they take out in taxes? And a lot of times that will either be mailed to the person, or it may be an online system where you actually have to have a code, go into a website to print out or to look at what the breakdown of your checks, how much was paid in taxes. Make sure those Social Security numbers are handy. And here is the 800 number to call. Probably should have figured out a way to make this flash or something on the screen. And see that that is not the main toll-free number for Social Security. So make sure that your beneficiaries do have the right numbers. I do have a warning about wage reporting for self-employment. It is different. For both Title II and SSI, it's net earnings from self-employment that has to be counted, not gross income, and certainly not the infamous owner's draw, which there's more material on our website and in your manual explaining the difference between gross receipts, net earnings from self-employment, and owner's draw. It is net earnings from self-employment that Social Security cares about. Now, what is that? It's you develop NESI by you taking the gross profits, and profits means what did you bill minus what allowable business expenses did you incur, and then you multiply that profit by a figure of 0.9325, and that's an important figure there. Actually, I think it might be 0.9235. I think that might be a typo on the screen. I'm sorry about that. Countable NESI may be further reduced by applying work incentives. What does all this mean? A lot of reporting responsibility, and let's not use the automated telephone wage reporting system. With self-employed people, you would never use that system. The biggest problem people cause for themselves is not keeping their books on a regular basis, so they don't even know what their profit is, they don't know what their net earnings from self-employment is, and keeping those good business accounts is absolutely critical. Now, another problem we see is actually being too diligent in the wage reporting. That can cause more problems than actually not reporting at all, believe it or not, because in many cases they're looking at your annual profit, what you're showing at the end of a tax year. You don't know what that is until the year ends. You might have a loss one month and a profit one month. Well, if you're reporting monthly, you're going to create havoc for yourself and for that claims rep. So typically, we need to wait until the end of that tax year when all the taxes are prepared and you report an annualized basis. Now, there are some tips that we've offered you here. For any of you that have taken the training that we're running this spring on self-employment, these are reiterated from those slides. When you're a Title II beneficiary, you really should keep your business financials on a monthly basis at first, so that you're clear on when TWP months have been used and when TWP has ended. You report each month in which net earnings is over the current TWP amount, or remember in the Title II program, if you just work a certain number of hours, even if you incurred a loss, that can be a trial work period month. Typically, sending in month-by-month profit and loss statements will work for this. You don't have some special form. You have a month-by-month profit and loss statement. Tip number 2, after the trial work period ends, at that point, in order for Social Security to figure out if you're engaging in SGA, they need aggregate data. They need you to show that year of profit and loss. So you won't want to look at individual months, because remember, you can lose money, you can have a profit. You want to use that annual tax return, and that's what they are going to use to determine whether you're engaging in SGA. So people need to get their taxes done on time and get them submitted to Social Security so that that check can either be ceased or continued, as the case may be. Finally, never report gross income to Social Security when you're self-employed. Gross income is, I billed all my customers this amount. Well, if you report that, they're going to use that. But that isn't what is Social Security supposed to use. That's not going to take into account all the expenses you incurred. That's not going to take account that net earnings for self-employment, and you need to be careful that the information submitted is correct. Now, in the SSI program, you know it has to be different. NESI is determined at the end of the first year of operations. You really can't see what's going on in the SSI program by reporting monthly. This is a situation you really just have to tell Social Security, I'm engaged in self-employment, but I don't know what I'm earning. You wait for the end of the first calendar year, you report your total profits then, and then Social Security actually retroactively adjusts your cash payments based on the profit or the loss that you incurred for that full year, and they retroactively go and determine, oh, we should have paid you this, we did pay you this, we owe you, you owe us. It's the settling up that you're familiar with through redetermination. Okay, some tips. If you're not expected to make a profit, and in fact you don't, you can certainly send in your tax returns, but nothing's going to happen there. If you do make a profit, make sure you get those tax returns in so that Social Security can retroactively adjust those payments. After that initial year of operations, you need to watch out for what you're projecting for NESI. In the SSI program, they're going to take your first year, they're going to look at whatever profits you have, and unless you tell them otherwise, they're going to use that as an estimate to adjust your check prospectively. And so if your estimate is poor and you end up making way more money or way less money, you're going to end up either getting overpaid or underpaid. One of those things, you just got to stay on top of it. It's the way the system works, and you need to be reporting as the estimate fails to match up with what the actuals are. And finally, the beneficiary, you just what I just said, you have to diligently and carefully track your actual net earnings from self-employment. Make sure that that data is submitted to Social Security. Make sure you keep a copy of everything so that that check can be adjusted correctly. Remember, just some general reminders. Many of these are things that you may already know. When you report work incentives, you've got to keep the receipts. BWIs, IRWIs, you know what those are. Your past expenses, you have to have receipts. If you lose your receipts, and we've all dealt with this, there are a couple of other options. You can ask doctors or pharmacies for printouts. Sometimes you can even use credit card statements or canceled checks. The best way is to keep receipts, but there are a few instances where there's a fallback position that you can sort of use in a pinch. If you're reporting by mail or fax, remember, use pay slips, keep receipts. You need to submit them with a letter. That's where you need to use that notice of change in earnings status or whatever your agency has developed. There should be something in writing. Don't just mail in receipts. You have to attach that to a letter so the claims rep knows who it is and you know how to apply this. And finally, I just want to reiterate to you what a tremendous payoff there is in you spending the time to teach individuals to fish, okay, to report. How important that is. Getting that habit of keeping the pay stubs, making sure the receipts for those IRWIs and BWIs are retained. If you can check on the person periodically, are you doing this? This is what you told me you were going to do. And then teaching beneficiaries to know when you report, this is what should happen to your check. And if the check isn't doing what you think it should, that doesn't mean all is well. That may mean, uh-oh, we have a problem. So we have to prepare beneficiaries to expect problems, they occur, and then what to do to fix them. And teaching community partners, let me tell you how important that is. That job coach, that case manager, that therapist at the mental health center, these are folks that have a lot of contact with beneficiaries. If we can teach them how to do this, we can avoid so many problems. And the misunderstandings people have about reporting, you know that they're just outrageous. So it's a lot of myth busting that we need to do, and teaching constantly, and supporting and answering questions, and following up. Monitoring. Monitor, monitor, monitor. Make sure it's being done. Make sure the check really is being adjusted, or the trial work period months are being recorded, all of that, to ensure that the individual won't be overpaid or underpaid. And then, by George, you better be available to do the sweep up, because no matter how diligent we are, no matter how competently we report things, it's a huge system, and things get dropped, things get done wrong, and we need to be sweeping up behind that beneficiary just to make sure that everything is being done appropriately. So for many of you, this was a review. For some of you, this might have been new information, but I'm glad that you pulled us up on the computer and spent an hour or so of your time. And don't forget, the chat room is available immediately following this, and if you have questions, I'd be delighted to answer them. Thanks for joining us.